trusted source for the liberty impaired. Be a part of Angel's Army. Angel Clark.
Welcome back to the Angel Clark Show. It's Friday. That means it's Economic Roundup Day. I have on the line with me Ken Schortgen. Ken is the National Finance Examiner for Examiner.com. He has the website, thedailyeconomist.com, and he joins us once a week to talk all things economics. Ken, I want to thank you for sticking around. I know that you usually, in the second segment, it is the end of the dollar as we know it. So are we ready for that, or is there more to discuss from the last segment?
I'm just going to touch on two things before we start the dollar collapse segment. Regarding this Goldman Sachs issue, this news just came out today, and obviously I haven't, and not everybody's had a chance to listen to the whole 47.5 hours of this. But if anybody wants to really pursue it, you're going to start seeing a lot of the transcripts come out on the web. So if I find anything of substance, I'll go ahead and bring it to the chat room either next week or the week after or whenever.
Yeah.
On there. The other side of the coin is that one thing to always remember: the Federal Reserve is a private institution, and they are responsible, fiduciary responsibility to their shareholders. Goldman Sachs is a shareholder of the Federal Reserve. So protection and inside information is not, is par for the course. So we're not surprised about this, but what it's going to do is it's going to not necessarily affect Goldman Sachs as much, but it's going to affect the credibility of the Fed. So in the coming days, we're going to see some interesting things of what people think of the central bank and especially the credibility. So Yellen is walking into an even bigger hornet's nest than trying to deal with low interest rates and the end of QE.
Yeah, absolutely.
Something else that's been coming up, we saw a big drop on the stock market yesterday. Now, they tried to recover about half of it today, which is usually a bounce after a big pullback. But one thing is really starting to come to pass. Retail investors are just not getting into the stock market, and they haven't gotten in the stock market since the crash of 2009, 2010. What a lot of the outlets are doing is they are almost doing a desperate clarion call. Get into stocks, and try to make you feel guilty. If you didn't get in, look at how much you could have earned, how much you lost, yada, yada, yada. Well, here's the problem. As the baby boomers start to retire, they are by law at age 70, they have to start dumping their shares a certain percentage every year. With all of the unemployment, with all of the college students who don't have jobs and have massive debts, guess who are not doing retirement savings plans, who are not buying stocks, who are not doing mutual funds, who are not doing pension funds? There is quickly going to be nobody to buy all of these stocks that all the retirees need to dump off the market.
So what's going to happen then?
Well, what will happen is that the first time somebody starts selling from this massive demographic of baby boomers, coupled with this massive demographic of insiders, because all that's really risen in the stock market has been corporate buybacks. Once that starts happening, it will accelerate downward fast. And the Fed, since they're pulling out of QE, they're either going to have to ramp up a QE program even greater than the one they just did, or they're just going to let it go. So the stock market is more about the fact that there are no fundamentals and no technicals. And if you don't have a baseline and foundation to trade upon, you are doing pure speculation. And hey, you know what? I hope you win, but I'm staying out of it.
Yeah, absolutely.
Now, one of the things we've talked about in the last few weeks was how U.S. sanctions on Russia and Russia's responses to those sanctions are going to end up hurting Europe far more than they're going to hurt Russia, because Russia has an ally in China. They already did that $400 billion oil deal.
Yeah.
They've already supplemented the fact that they put restrictions on Europe, EU countries selling produce. So they've gone to Turkey, they've gone to New Zealand, they've gone to a few other places, including China, and they've already got that supplemented into their economy. Well, since they're not buying from all of these EU countries and these EU farmers, the EU farmers and the businessmen are starting to revolt. And this week we had a group of French vegetable farmers go to a local tax office and set it on fire.
Really?
Destroying it. And they started protesting at other government buildings because they were demanding that there be changes to regulation, to rising taxes, and to an end of sanctions, standing with the U.S., and then to sanctions against Russia.
Did they? I feel kind of like I feel like, you know, the firing and burning of a tax office isn't going to do too much, because it's kind of like when they went into the Guardian building and they destroyed some hard drives to try and get rid of the Snowden leaks. I mean, you can't with information being so digital these days. It's very little that they're actually going to get rid of. But I think I understand the sentiment.
You're right, but the Arab Spring started when one lone man in Yemen set himself on fire because food prices were too high.
Oh, that's true. Yeah.
That the French Revolution started by a storming of the Bastille. These things can start with one single. The rise of Hitler started with the Reichstag fire. These things can and do start with a single event. Now, the thing about Germany is, Germany, their politicians are heavily invested in the business owners. The business owners can make or break every single politician, including Angela Merkel. There are 3,000 to 5,000 businesses that do heavy business with Russia. And Russia has already come out this week and said, hey, we are going to start freezing assets.
Yeah.
Start freezing European assets that are in the that are in Russia. Whoa. When that happened, all the European stock markets, the DAX, the London markets, the French, the German, they all fell all week.
Hold on to that thought, Ken. We have to step away for just a moment. The Angel Clark Show will return. More with Ken Schortgen coming up.
I'm just going, it's a party. Hey, heck yeah.
This is the Angel Clark Show.